The US dollar has continued to appreciate, gaining over 4% in April. Now, since the 1970s, this has occurred in just 6% of all months. Given the current global backdrop, the dollar should remain strong. For the euro-dollar, a key risk, the conflict between Russia and Ukraine, seems to be shifting from a scenario of a prolonged conflict to some escalation, including bans of Russian energy imports, which could lead to significant disruptions of energy flows to Europe. We have therefore further lowered our year-end euro-dollar target to 102, below consensus expectations of 110. Most market participants focus on monetary policy divergence. This line of thinking implies that while the Federal Reserve is restrictive and the European Central Bank relatively accommodative, the euro-dollar tends to decline. With the ECB poised to start increasing interest rates, consensus estimates point to some upside. However, we preferred to look at the dollar's outlook through the prism of global liquidity. Central banks face an arduous task of navigating downside risks to growth and upside inflation risks, and they seem focused on inflation. As monetary policy tightens and global liquidity declines, the dollar will strengthen further. And this strength is now broadening out against a wider range of currencies on slowing global and Chinese growth. We expect the dollar-renminbi pair to trade between 670 and 690 for the remainder of 2022. Currencies of commodity exporters, such as the Australian dollar, which did perform well over the first quarter on higher commodity prices, have given up their gains. The New Zealand dollar looks particularly vulnerable. Overall, there are exceptions to this dollar strength, namely the dollar-Swiss franc pair. The large rally seen in the currency pair looks overdone. As for the euro-Swiss franc, it should track the downward trajectory of the euro-dollar. You can discover more on our currency market views in the May edition of our FX Monthly. Thanks very much for watching.